I'm recording now. Can you hear me? I see the speaker.
Yes, I want to mute myself so that
Oh, okay, okay. Yeah, no, But wait. Just tell me again what because you need to ask me questions because that's those
okay,
questions are what keeps me going because
okay. So
I won't
basic,
really. So carry on, carry on.
basically, it's about pips. Yeah, then 5% risk. You get. Then I don't know. Sometimes if I join your signal late, is there a way like for me to like modify the position to like suit
The,
it
the,
or
fun, the
something?
funny thing is that the funny thing is that the market does not really wait. It does not really wait for anybody. You understand? If the thing leaves me and it has left it. So that's why I always try and then ginger everybody to unmute because some people see Telegram as one irrelevant app like that. So that's why I normally
Okay,
say they should not forget to unmute because so many spams are on Telegram. Random people can just add you in different groups. So all those
yes.
notifications can be annoying. And me, I understand. So yeah, I don't really feel bad if anybody is muting. But when it's the right time to unmute, just unmute. You understand? So that's it. But when it leaves you. So it's like there's nothing you can do about it. Unless, unless there's more of a retracement in the market. You understand? Whereby
Okay.
price comes back to our entry point before reacting again. That's what happened on Friday. Yes, on Friday. I took my sell on USD card, I think, or US oil. That was the thing. So price came back to do some kind of retracement. I was able to enter again with one position, 0.01 loss. You understand? So that's the chart. But let me start with the tips stuff. So so the way I explain, just like the way I explained it on the group, tips is more of the distance between point A to point B. You understand?
Okay.
So imagine we have price at 1960, 1960. See the price, see the level here. This is the level here. So I'm using this arrow thing so that I can see where my pointer is sitting. So it's 1960.31. So the distance between 1960 to
I can't see your mouse.
1970.
So
You can't see my mouse, seriously.
okay, I can see it now.
So, can you see the mouse? You can see the point. There's a
Yeah, I can.
pointer thing. There's a pointer thing, like something like cross, that is showing you the current price of gold. You understand?
Okay.
You understand?
Yeah, I understand you.
So this pointer thing. So now I was saying this basically is just the distance from point A to point C. That's how me basically I see it. You understand? I call it just distance because those tips now are
Okay.
money. You understand? And for everything, there is a particular price to it. You understand? So now for when I say people, the distance from point A to point B, we have an example. We have gold at 1960. I'm using the arrow to show you where we are at 1960.
Okay.
So the tips now, I held the left button. I held the left button, and now I'm dragging it up. So if you see, I'm taking it up. I'm going towards 1970. So
Yes.
now this is distance. So we're saying that this is from 1960 to 1970, which is the distance.
70.
uh So for you to now calculate this tips, we know this tips as what 100 pips. If you check, let me drag my this thing out so you can see the figures that are there. So in the figure, firstly, you're going to see our end point, like where we drag the mouse to the last place, which is 1970. You're going to see it there. Then you're going to see the number of bars. So all those bars can be seen as candlesticks. You understand? And you know, for every candlestick, imagine one
Yeah.
probably a 15-minute candlestick. For each candlestick, they are what? They are speaking for a 15 minutes movement. So per candlestick is 15 minutes. So if you go to another, this one you may not know it. This one you may not know it,
Hour.
but let me. Hmm? What do you say?
Like if you go to another minute,
Okay,
like
yes.
maybe like 30 minutes.
So you understand that for every candlestick, if you change, if you're changing your the this thing, the duration of the candle changes as well.
Yes.
You understand? So, but if I'm as now I'm in 15 minutes now, each candlesticks now are representing what 15 minutes, what happened in the market within 15 minutes. So if I go to 30 minutes, each candle is going to tell me what happened in the market within 30 minutes. You understand? Same thing goes with 1 hour, 4 hour, daily, weekly, and then monthly. You understand? So now coming back to the bars, so we have 36 bars now, and we're in what 15 minutes. So literally, as I'm dragging this thing, see as if I'm bringing
Within
it
10
closer.
pips.
Hmm? What is it? That's my internet activity.
I said we have 36 bar
Hmm.
within 10 pips, right?
This is actually more. Wait, let me see.
I'm not getting it.
Wait, 30. It's 100 pips, nothing. That's how it is. It's 100 pips. So I started from 1960. So it's just normal reasoning. 1960 to
60,
19,
yes.
1960 to 1970. That's literally
70.
100 pips. And 100 pips is basically 100, 1,000 points. So you could note that thing down. Wow. You understand?
Okay.
So 100
100
pips,
pips is 1,000
100,
points.
yes, 1,000 points. So 100 pips, 1,000 points. Then below it, that's um, 100 pips is 10 points. Is 100 points is 10 pips. You understand?
Yes, I get it now.
Then 10 pips. Just write it from ascending order to descending order. You understand it better. 1,000.
Okay.
So for
That means
1,000
1,000.
points, tell me, talk.
So 1,000 pips is 10,000 points.
Yeah, sure. 1,000, not 1,000 pips. 100 pips is 1,000 points. And then, okay, yes, you're correct. You're correct. You're taking up to the next this thing after 1,000 points. 1,000 points is 100 pips. You understand? 10,000 points
Yes. Yes.
is 1,000 pips. So just as
1,000
increasing.
pips.
Wait,
So
wait, wait. 1,000 points is
10 points
100
now
pips.
will be 1 pip. So like
10
I'm
points.
going lower.
10 points. Yes. 10 points now is 1 pip. You understand? So that so it may I try
But
recommend
all
I
those ones
try
used to give
hmm,
us.
mm,
All those ones used to give us.
I
They're
convert
only
it to pips.
0.1.
What's that?
You know, it used to say 0.1. Maybe na my head sha.
Wait, 0.1 let me
0.1.
on
I don't know.
0.1 pips.
There's one
I
I'm
call 200 no I call 200 and something pips which is relative to 2,000 points. You understand? Basically I don't really call points because points are not really
okay.
popular. So I make use of the word pips because I've already converted it here. So most times, um, I think I've answered that your pips. Now you're able to identify pips. So now let's take tips to risk
Yes,
management.
very
So
much.
for every tip, you have its value. You understand? Every tip has its value. You get so for 1,000. Let me my calculator. So for on gold and also for different assets, there are different rules on how you get your PIP value. You understand? So for gold like this, based on a 0.1, which is what a micro lot size. Do you remember when I was talking about the standard lot size, micro
Yes.
and then micro? So one one lot size is a standard lot size. 0.1 is a micro
One.
lot size. You understand? Then 0.01 is a macro lot size. There you go. So
Okay.
basically, so now I'm talking about the 0.01. So on gold, 0.01,
That's for good.
this is for gold now, rule for gold. So for gold now, 0.01, for you to get the peak value for a 10 pip on 0.01 lot size, if you buy gold um, at 1960 and price went up to what? Want to get what? Want to get at least 10 pips, which is what? 100 points. You understand?
Yes.
Which is 100 points. So for you to get the pip value, we know that 0 point is a rule. So we know that 0.01 for 10 pips is $1. Then for 20 pips is what? $2. You understand the math? The math.
Come again. No. I don't know.
0.01 on 10 pips. This is how you get the pip value. So I started with, imagine you want to buy, see my arrow, just check, you want to buy at this level. And this level is what? 1960. So imagine you want to buy
Yes.
this thing from there, meaning that you're predicting that the value of gold is going to rise up from 1960. Yes. So imagine you want to buy it. So we're going to stop at what? 1961, which is what? 10 pips.
Yes. For 100
For
points.
10 for 100 points. You can also call it 100 points, but I advise you to learn
10 pips.
yes, I'll advise you to learn how we call you should learn the tip system using the word tips rather than points, because most people they don't really use points. So it's just we talk in tips. So now I was saying, imagine you want to buy from 1960 to what? 1961, which is what? 10 pips. The rule for gold is that for every for in a, on a macro lot size, 0.01, you understand? 0.01 lot size. If you're buying at 1960, if price goes up 10 p, it means you're in a profit of what? Plus $1. You get. So if price goes, just imagine
Yeah, I
now.
get.
Let me now explain. Let me know use let me know use 10 p. Let me use 90. Obviously, if price goes up and it gets to 90, what's going to be our peak value? It's going to be $0.99. True, right?
999. Yes.
Yeah,
Yes.
0.99. Hey, so that's the rule. So if for 10 pips is $1, then loss price of 0.02 on 10 pips is what? Do the math.
If it is
If if for 0.01, if you're using 0.01 loss size for 10 pips, if price goes up in that direction and it moves 10 pips, which is at least 100 points, you understand, and it goes up 100 points or 10 pips, if it's $1, then imagine if we're using 0.02 loss size and price goes up to what? 10 pips or 100 points, what is that? What's going to be our dollar value? That's our peak value in dollar.
That would be like
Eh?
$2.
Uh-huh. You're getting it now. So that's the math. That's the math of it. So now, for you to now enter, I'm sure you know as you've known this one, you're going to know the other ones as well. So,
Yes.
you understand? You're
Like
going to
for
know the
the
other one for
USD
0
card.
point. Okay, US. Okay, let me talk about USD card. USD card. That USD card is the rule for that is $0.73. So most times I recommend people making use of the broker that me I recommend because not every broker, it's not all the brokers that use the same set of rules. You understand? You have to, before you start trading with a broker, you need to understand how their peak value is, what their peak value is. You understand? So for this thing now, for USD card, I mean USD card chart now. So for USD card now, if price is going to 10 pips, in USD card, 10 pips is what I bet I told you concerning the 100 pips. You know, 10 pips is 100 pips. You can see my this. You can see the pips
Yes.
and the points there. 10 pips is 100 points rather.
100
You can see
points.
the points. You can see the points that I stopped at. That's 104 points.
Yes.
So that's at least let's just call it 10 pips. You understand? So now, now in USD card is quite different. In USD card, what we have for 10 pips is what on 0.01 lot size is $0.73. You understand?
Wait,
It's
to
not
on
all,
0.01
oh yes,
or
on 0 point
0.1.
on the yes, no 0.01. Don't forget, gold. I was using the example. I used the example 0.01. That's the
Okay.
micro lot size. I'm not using standard. Standard is one lot size. The macro is 0. Is what is this lot size again? 0.1 lot size. You understand? They also have nano losses. That's the list, but you're going to hardly see brokers that are offering that. Brokers they majorly just have standard they have standard loss size, they have micro loss size and then macro loss size, three of them. You understand? That's the basic one that most brokers they do offer. Even trading view, even I say trading, even MT5, you check your MT5, that's what they will show you there. They can't show you 0.001 lot. That 0.001 lot, that one is not the nano lot size. So it's not all brokers
Okay.
that do
Offer
everything.
down.
Yeah. So back to USD card. So now for USD card now, I was explaining that for USD card now it's quite different. The calculations are quite different. It's not the same. You understand? So USD card now, the rule for USD card is that um for every 10 pips on a 0.01 lot size, imagine we bought from wherever, because all these figures are too long. So I can't call it like good, like I can say 1960 or 1930. This one that is 1.33. So let me just give a random example. Imagine we bought from this level that price came up from, because I'm sure it's a plenty 10 pips. And then we go up, we go up, we go up. It will reach 10 pips, which is 100 points. So now, for this 100 points, for 0.01 loss size, this 10 pips, which is 100 points, is what? $0.73. That's the rule.
Okay.
I know that's all fast. You understand? So if I want to do my calculations for probably 0.2 pips, then 0.02 loss size on 10
$1.46.
so I'll plus it, you understand? So that's basically it. So I have all these things off. It's not like I have a place I store them. I already know them in my head. You understand? Based on the research
I
I'm
get.
making. So now for this thing. So I think that explains. You now know how to do your calculations till you reach one
Yes,
lot,
I know how to do
one
it.
standard
But what about
for
what's the
oil.
dollar for
Oil,
0.
abi. Hmm?
For 0.1 lots, like the micro lot size?
0.73 times 10. That's 7.3. Do you understand the mathematics?
No, USD.
Do you understand mathematics? Do you understand what I mean?
No.
So if you just do the imagine if we have 0.0, if we have 0.01. Okay, let's go to gold now. If you have gold as what 0.01 for 10 pips, if we have it as $1, then for
Yes.
0.1 we have it as what? It's not $10.
Yes, $10.
Then for for one standard lot size, we have it as what? It's not $100.
$100.
Now, so you be putting your zeros, be bringing it forward. You understand? So for this
Okay.
one now, since we see that our USD card now, our USD card is 0.73 for 10 pips, yes, using 0.01 lot size as we have it as $0.73. You understand? You understand what I'm saying, right?
Yeah, I get you.
So if you're considering for the 0.1 lot size, if you consider that one, you're going
To
to
be
bring some to the front,
7.3.
7.3. So that's how you calculate it. So
Okay.
for one standard lot size now for 10 pips on USD card, that's what $73. So you just be bringing
$73.
and so you just bring it them forward. So that's the magic. That's how it goes.
What about for sports crew?
For what?
USOIL.
Okay, US oil. Wait, I'm coming. Yeah, I'm coming.
Don't they get this thing? Hey, Terminator.
They why me? I won't
I know
check
the
that.
one you boss.
Okay. So for sport oil now, that's for crude. WTI, West Texas, yes, West Texas Intermediate. So US oil. For US oil now, it's quite it's quite different. So on US oil, 100 pips, you can fetch a lot of pips on US oil. You get so US oil now, 100 pips now on gold is going to be seen as 400 based on if you're using your eye to calculate the distance, not using the points that are here. If you're using your eye to calculate
Mm.
the distance, you're going to see that it's times two. So USO is always the one that pays me very well because of the distance, you understand? So now for USO now, if you want to calculate USO for 10 pips on 0. Let me start with for 10 pips for one standard lot size is
Mm.
10 dollars. Do you understand, man?
Wow.
I swear it's $10 for one standard load. It's $10. So if you're coming down for 0.1 standard load is what? Abi is 1.0. That's $1.
Mm.
Mm-hmm. You're still in track. Abi, you still understand what I'm saying?
Yes, yes, then $0.01 will be $0.1.
No, 0. Yeah, zero point
Sorry,
zero
lot
one lot
size.
size. Yes, it's going to be zero point one
Yes.
dollar. So that's how it is in oil. So that's what I'm saying. So they have their own rules. They have their own rules. So for other most times the place that there's error when it comes to uh, comparing brokers peak value and all. The this thing that are mostly affected are just currency pairs. Gold, that is more the one I told you now is gold standard calculation of what they call a PIP. Do you understand?
Okay.
It's gold standard calculation. So now let me now get to the risk. So now imagine I use $1,000 account. So I want to risk what? I want to risk 10%. Yes, 10 okay, let me the way I normally do it. I say I have 10%. Then as I have 10%, I don't just go all in because I know that the market is more of probability. It's not something that
Yeah.
we know that now sure something. We are
Yeah.
just trading what the market tells us to trade, you understand? And at the same time, it's still under probability. It's not every time it
Yeah.
works. So you have to be smart. So now for you to now be able to trade 10% of your capital, you have to divide your 10% by 2, which is 5%. So now I want to take 5% of 10,000 of $1,000, which is what, $50. You understand?
Mm.
So now imagine that my open price. Now you see my screen, Abi?
Yeah, I'm seeing it.
Okay. Now imagine I started buying from here, and let's say my stop loss is what? Is 50 pips.
Yes,
50 pips
50
is what?
pips.
50 point, 500 points, right?
Yes.
So I know that if I put a standard lot size of one, we're talking about US oil now. We're not talking about gold. This US
Yes.
oil chart. So if I put a standard lot size of one, if
Yeah,
price
like fifty
goes against
dollars.
hey, if it comes down, that's total of $50. So that's how I manage my risk. You understand? So I
Okay.
so that's why I know that okay, it's $50. So I now do the calculation. If $50 is from year to year, I can easily just drag this thing down because most times my stop loss is always at where? At support level. You understand? Support level at the level below here. All this, see, the market is all about support and resistance. Here is the resistance level. Anything above is resistance level. Anything below is support level. But when price breaks this, see this level now, price has broken it. When price breaks it, is the inverse now. You don't call it resistance, you now call it support.
Okay.
You understand? So this support, this resistance, this support, this resistance. Price broke what? Price broke resistance here. It broke out and things turned into what? Support because it's now below. The level is now below current price. So price came back down, tested the support zone, and the support zone actually supported it and boosted us back up again. You
Mm-hmm.
understand? You can see it on let me put 5 minutes. Let's put it there. So you can see it there. See price was going, price was going, price was going up. After going up, let's say this is support, this is support zone. This is our resistance zone that turned support. So what happened? Price went up, price came down to touch what? The support zone. And what happened? Price went, it boomed up back. So this level now acted as a support, not resistance anymore. That's what as a support because the resistance was broken and then it flew up. So that's basically so now I know that from here to 500 feet is what? 50 points. So what I want to
Yes.
do, I want to figure out, I want to only risk I want to only risk 50%, that's
5%.
5% rather of my capital. And I'm seeing that 5%, if I drag it here, total is, let us just say 900 points. And that 900 points is what? 90 pips. So
90
meaning that
pips.
meaning that if I put 0.0, if I put one standard loss size and price comes here, it's going to be what? I'm going to be in loss of what? 90 something dollars. I don't want to lose 90 something dollars. What did I do? I then reduce my lot size. You understand?
Yeah.
You understand? So if I'm able to reduce my lot size, let's divide it by two. Let's divide this 91 by two. This 91 divided by two. You can use the lot size.
Like
If we are doing that,
45
if we are
or
doing that
something.
now, we can now consider using 0.5 lot. So for 0.5 lot, we are going to have half of 90
90
91
pips.
91 or let's say 90. So that's 45. You understand? So if you want to at
Yeah.
least put more life so that you can get up to 50, at least you can start increasing your PIP, like small your lot size small by using probably 0.9, sorry, 0.51. Then you be increasing like that small, then you go to 0.52 and check which one is equivalent to at least 50 dollars. So if I do that now, I know that if I'm going to come out here, price is going to come down here. I'm going to stop out at $50. And that's how much you're willing to risk. You don't want to risk more than that. If you get stopped out is what it is. You know that better days ahead. I remember in our trading style, we don't go for we are risking one to get one, meaning we are risking $50. Imagine from year to year now, this is 90 pips. It means that we now our TP. Imagine price now start going in our direction, and our TP is around here, which is 90. Let's say around this level. I'm checking the pip value, the point, which is 90 pips. Do you know that your RR has risk to reward, meaning that what you're risking, what are you risking to get? So that risk is serving as the capital you put in the market as risk. Then the reward is what you're going to get when price goes in your direction. So now basically I don't normally use 1:1. When I say 1:1, I mean I'm risking $50 to get $50. I don't do that. So I know I have my entry model and then my exit model. So my entry model always gives me nothing less than 1:3, meaning that I'm risking $50 to get what? $150.
It's
Do you understand?
yeah, I get you.
I'm risking $50 to get 150, and to get that I'm doing 50 times 3, which is, imagine now, if we have from year to year being $90, if price goes up in our or buying, price goes up in our direction, and it gets and price went up to 90 pips, then we know that it's a 1:1 trade, and this is not where we
One
want to make
ratio
our
three,
profit. No, this you know that this particular movement now is 1:1 trade, because i'm
yeah, yeah,
risking
yeah.
i'm risking fifty
50
dollars to get $50
to get
again.
50.
And we don't want to do that, because in our next trade, what if we lose the $50 back to square one? But if you check the strategy I use today, we're seeing profit, because initially we got a profit of 1:3 trade. That's RR
Mhm.
on USD CAD. Then after taking that trade, we took two more extra trades because we're in profit. I only do that when I'm in profit. You understand? So
Okay.
our first trade was in profit. So we now took two extra trades, which was in loss. Meaning that for each trade that we are taking, we're risking what? 5%. And 5% is what? Our $50. You understand? So
Mm-hmm.
we now lost we now lost two out of the three that's the 1:3 out of the three that we got as a reward, leaving us with what?
Mm-hmm.
1:1, meaning that we risked 50 to get 50 today. Do you understand? That's just the logic of it. So meaning that we are seeing
Okay.
profit, and our profit is what? $50 for today.
$50.
You understand? So there are some people with very, very, see this game, let me tell you, this business is all about risk management. Forget the strategy, bro. If you understand risk management, you never blow your account. I won't like to get, I'm telling you, you never blow your account. You can't do that. So you can't me, I hardly blow account because of Anan. So
I
that so
get.
that's it, sha. So that's all about that. So for the other question that you're asking, which is my five, okay, I've already explained my 5%
Yes.
percentage. So that's what I did here.
I think you've even covered everything.
Hmm? What is it?
I think you've covered everything.
Yeah, I've actually covered everything I need to know. So that's basically gold now. I missed a buy on gold today. This is level I wanted to buy, but I wanted to have more patience for price to come to this level. Let me delete. I'm out of time. Let me talk fast. Can you hear me?
Yeah, I can hear you.
So this line here, there's an horizontal line here already. This was the place I was waiting for gold to come to before I buy. You understand? And I didn't I bought. This is over what? This is 200 feet. This is 2,000 points. You understand? This
More.
200 feet you could have made. And that's money. And you know what 200 feet is?
Bastard me.
Yeah. So very, very, even USD card that we took the first buy in the morning. See the spike now. So for me, I bought from this level. And price went like this. Guy, this is over what? This is 50 pips, 53 pips.
600
But
pips.
okay, let me see. It not
Sorry.
wait.
50 points. 50 pips.
I'm trying to check it to trade. It almost reached 600 and something points. That's 50 pips, but
Yeah,
it didn't get there.
60 pips.
So, but this is how much you could have made, which is very, very much. So that's basically it, sha. That's basically it.
But if you
I
had
think,
sold it from that up,
hmm? No, I
if you
can't.
had
I do not
sold it,
have. That's not. No, that's not how I enter. I don't have any signal yet. There's nothing to signal me that Ken, it's time to sell. Yeah, I don't do that. You can't. Instead, I just wait for a retracement. This is why I bought, but we got stopped out again. But it is what it is. So me, I don't really. I'm not really bothered. Just have your psychology level fixed. Your mind. That's your psychology. Have it fixed. You understand? Trust yourself
mm,
and the rest. Just forget. See, loss is for me now and have fun. I don't really care about losses, but I know that if I'm going to recover it, my RR, that's risk to reward is always good. So if I'm going to recover it, I'm going to make times three of what I lost. Do you
mm,
understand this thing? So I'm not really
yeah.
bothered. So that's it, yeah. But that's all. I can't do again. They've already told me thank you and they're cutting me out.
I'm the
So
one that said
probably
thank you, Ken.
I've been serious.
Yes, no.
Oh, I thought it was even them. Like, this one, they won't cut me out again.
Oh, thank
So
you so
that's it,
much, man.
yeah. That's it, bro.